Heavyweights see a pullback, dragging indices lower even as midcaps continue to notch gains. Energy, metals and utilities are the big gainers even as IT and banks drag.
Reliance Industries bounces back with strong growth in retail, a resilient show in the O2C segment and an improving performance at Jio with its ARPU topping 200 rupees and services seeing a good pickup. The stock gains.
Infosys beats third quarter estimates and ups its revenue guidance, but concerns over the impact of wage hikes coming in the next two quarters and tapering of pass-through business hurts the stock.
Axis Bank sees an all-round deterioration across parameters with slowing business momentum, dipping low-cost deposits, rising slippages and crimping margins. The stock is among the top Nifty losers. Halfway through the final trading day of the week and the screen is looking for some recovery. Good afternoon. You're watching Halftime Report here on CNBC-TV18. I'm Hormuz Fatakia. With me as always is Mangalam Malu. Well, Mangalam, it seems as though the benchmarks want to end the week on a high. Some recovery from the lows of the day, but there are two very important drags on the indices this afternoon.
Well, the screen is looking for recovery just as you are for your voice, Hormuz. But what I'll tell you is that, the Midcap Index is trying to, not fall as much as the frontline indices. It is trying to outperform. It's marginally in the green right now. But the advanced decline tells you that the market's still not made up its mind, because for most part of today's trading session, we had the green line above the red line. Thereafter, there was that intermingling that took place, and now we have the red line above the green line, even as they are coming closer to each other itself. Reliance is the one stock which has saved the Nifty from the blushes, still holding just below the 23,200 mark, even as the Nifty Bank is the big dragger. At one point was down 900 points, currently seeing some bit of recovery from lows, but still down about 800 odd points itself. One mid-cap stock that really, not particularly mid-cap, but largish mid-cap that comes onto my radar today is Varun Beverages as a big decliner, down nearly 5%, and that after the details came in from Reliance Retail's beverage business, which is Campa. They said that Campa now has crossed the 10% market share mark in the sparkling beverage category in select states. So that means that incremental growth for this category may come to Campa and other players, not particularly PepsiCo and Coke. And the second one that I'm looking at is that Campa itself will be a 1,000 crore business by the end of this year. Campa and Independence, both the FMCG verticals of Reliance, the in-house brands, will end FY25 with a turnover of 1,000 crores. For a company to start in 1 year and cross that 1,000 crore mark, which is roughly about 7-8% of Varun Beverages' overall revenue, that means the incremental growth could be a little more difficult for Varun Beverages than the others, and as a result of which the stock is lower. But you're looking at BPCL as well. We have to go across to Sudarshan for that.
Sudarshan, among the top gainers today on the index and at the highest point of the day now, in fact, almost 3% higher. Sudarshan is joining in to explain what's causing this movement on the stock today. Sudarshan.
So BPCL has achieved financial closure for the expansion of Bina refinery unit. Company has signed loan agreement with consortium of lenders led by SBI for amount of rupees nearly 32,000 crore. The project, which cost nearly 49,000 crore, will help increase the capacity of Bina refinery, and post the increased total capacity would be 11 million tons per annum from current capacity of 7.8 million tons per annum. So what is the read through? So financial closure indicates that expansion is on schedule and the plant would be up and running in nearly 3 to 4 years. In another news, US EIO on January 14 had released short-term outlook on oil. Now in 2025, US EIA expects Brent crude oil price to fall to levels around $74 per barrel and should fall further in 2026 to levels around $66 per barrel. So on the back of these two news, you can see an uptick in BPCL and currently up nearly 3%. It's the top Nifty gainer.
The overnight drop in crude oil prices also coming to the rescue there. Sudarshan, thanks a lot for that. By the way, just before we take that break, I wanted to highlight some losers on the screen. Sterling and Wilson now has fallen to the lowest point of the day, 8% lower now after that spike that it had seen in yesterday's session after its results. And now that has slipped to the lowest point of the day, has Sterling and Wilson Renewables now 8% lower. But before we take that break, it's time for Growth Code, a special initiative by Grow and CNBC-TV18 that's designed to provide you with valuable insights and strategies to navigate the market and make informed trading decisions. Today, we'll take a look at the rising trends of investing in SME IPOs and address that problem that traders face when they invest in a company without understanding the fundamentals.
The Indian SME IPO market is booming. With a growing number of listed companies, an ever-increasing market capitalization, and soaring investment optimism in the segment, investors are flocking to SME offerings. But are they making informed decisions? Experts suspect that investors may be overlooking risks before joining the SME bandwagon.
In these small IPOs, people are coming not for a long-term growth, wealth creation. They are coming to make quick money. And when they hear on YouTube or on TV or they read in the newspaper that any particular SME IPO was listed with 100% gain, they get interested in that. They ignore actually fundamentals, they ignore the products and services of the company, and this creates the whole problem.
For investors, limited financial records and disclosures by SMEs, along with post-allotment liquidity issues, can significantly impact returns. There are other risks to consider too.
I have seen a lot of companies, those were listing with 100% gain, but within next 1 year, these companies came down by 50%, 60%, 70%, 80%. And because the liquidity and volatility is there, people were not able to exit also.
The complexities of the SME IPO market requires a nuanced approach.
SEBI understand that big size retail investors should be participating in this SME IPO, and that's why they have kept the minimum investment amount 1 lakh and more.
Research and risk assessments are essential to navigate the SME IPO market successfully. Don't let the hype cloud your judgment. Informed investments are always the safest.
Welcome back. 100 points down on the index, 100 points off the lows of the day, and contributing a substantial chunk to that recovery is Reliance Industries, the Nifty 50 big boy, and that is the one that's holding on to the gains now, 3% higher after a good third quarter that it reported last evening. Rima is joining in with the key highlights of that. Rima.
Well, it's a good showing this time by Reliance Industries. The company's revenue growth, EBITDA, profits all coming in ahead of street expectations. The consolidated EBITDA was up 12%, ahead of the CNBC-TV18 poll of 8%. So big beat there. And the reasons for the beat were, one, the oil to chemical business and retail. Retail was a drag on the company's financials for the last couple of quarters, and that has shown a solid 18% increase in revenues. And even at the EBITDA level, the growth was about 16-17%, much ahead of street expectations. So oil to chemicals did well, but it was expected, given the decline in Singapore GRMs. Refining was expected to do well. But the positive surprise came in retail. So what's driving the momentum? For one, the stock has been a laggard. Now, Jeffrey points out the Reliance stock has corrected 20% from its July peak on slower earnings growth and concerns about the retail growth over the medium term. But now the recovery that we've seen in retail gives them confidence about a 15% growth for the retail business in FY26. But again, we'll have to wait by to see if the momentum is sustainable. Secondly, valuations for the company, according to Jeffries, is the cheapest that we've seen since the COVID correction. So it's a 9.8 times forward EBITDA. And finally, there are potential catalysts going ahead. The big one, of course, is going to be Jio IPO. But even the Jio business is likely to be stable given the tariff hikes that we've seen. Jio Air Fiber is likely to do well. The start of new energy projects, and retail is going to be the big one, the recovery and the growth there. Bank of America maintains a buy. They say the risk reward is favorable. CLSA too has an outperform rating on the stock.
Take that point, Rima. Thanks a lot for that. The stock has moved to the high point of trade, and as a result of which, the problems that the Nifty Bank is creating for the Nifty have been somewhat negated by what Reliance is doing as well. So Nifty currently with a cut of 97 points. So trying to make an attempt above that, 23,200 mark. Once again, Reliance has moved higher. But the other stock which is doing well is Hindalco. Nuvama has upgraded the stock from hold to buy. Nigel, what is their rationale here?
Well, that's right. Nuvama's gone ahead and they've upgraded Hindalco from hold to buy. They've gone and upped their target price as well to around 776. They've skimmed down on the EBITDA estimates for the current fiscal because of the softness in Novelis's earnings. However, for the next year, that's for FY26, their EBITDA estimates have gone up by close to around 4%. Though they're factoring in lower aluminium prices, they're highlighting the fact that actually the Indian rupee as well has got a little bit weaker. So now they revised that from around 83 rupees. Now they're resuming close to around 86 rupees odd. The few big pointers that they're making, let's break it up into three pieces. One is on Novelis, then on India, and on their debt position. or Novelis, they are saying that there is a tightness with regard to scrap, and because of that, the input costs have gone up. But they believe this can be mitigated because volume growth will come about, and also the product pricing will improve. So because of that, they are expecting that Novelis's profitability will revert back to around $500 per ton in Q4 from around $400 per ton that they're likely to report in Q3. Next up on the India business, they are saying the focus has been on increasing VAP as well as on reducing cost of production. And they highlighted that the current volumes, as a percentage of the current India volumes, 31% of their volumes are VAP. But they're going ahead in the commissioning of facility at Hirakud. And that's what can improve the overall profitability by around $35 per ton in FY27. Add to this, they are saying that they'll start benefiting from the cost initiatives, namely the captive coal that they are likely to get, and also the value-added products that they are talking about, plus the 1 million ton alumina facility that will come on stream. Put all this together, the cost of production could go down by close to around 40%, and the EBITDA per ton of the domestic business can move up to nearly around $1,500 per ton in the years to come. So they're saying the India business as well have tailwinds because of cost cuts as well as on value-added products. And finally, they are saying that yes, there's a huge capex of more than $8 billion in the next few years, but it's likely to be largely funded via internal accruals. So that's why they're saying that there won't be any big movement in the debt number. Currently, it's around 33,000 crores odd, and going ahead as well, they believe it'll be around this 33,000 crores odd. But all this together, the street likes it. The stock has seen a sharp correction from the top, but Nuvama is now going ahead and turning quite positive on the stock. Back to you.
The street likes it indeed. Nigel, thanks a lot for that. 2% higher on Hindalco, still holding on to gains after correcting slightly from the highs of the day. Take a short break. Up next, we get in touch with the management of Delivery. Ajit Pai, who's the Chief Operating Officer, joins in to discuss their new rapid commerce service. Stay tuned.
Welcome back. One of the stocks which has been buzzing in today's trading session, bucking the overall selling trend, is Delivery. Remember, the stock has seen a decent recovery from its 52-week low after the stock had seen a lot of underperformance. A lot of brokerages turning positive on the stock as well. They've introduced their new service called Rapid Commerce, designed to offer sub-2-hour deliveries. It's debuted in Bengaluru and already handling more than 300 orders daily. So to discuss the potential of this business for the company and what it can do for overall volumes, we have Ajit Pai, who's the Chief Operating Officer of the company, joining in. Thanks a lot, Ajit, for joining in. 2 hours is also a lot in the world of quick commerce, but be that as it may, everyone wants everything quicker. So the first obvious question then is, what is the total addressable market of this service? How big can it be in terms of revenue for you? And secondly, will this be cannibalizing your e-commerce deliveries already? Is this an addition to your e-commerce business, or is it a replacement?
So thanks for having me on the show. So I think the way we look at it is that it is an additional product to the array of e-commerce services that we already provide. There is already a large TAM so far as e-commerce is concerned, and within that specifically, brand and D2C commerce has been growing the fastest. We believe that this service will enhance the value that D2C and brands can provide to their customers, and hence overall it will be a part of that market. We do also think that faster delivery will help brands and retailers grow e-commerce faster than it has been, and hence it is an addition. It is overall, over the longer term, it should add to the growth rate of e-commerce.
Ajit, good afternoon. Thank you for joining in. How much is the expected scalability of this service? To what potential do you wish to take it to, and the revenue, the maximum revenue that you can generate from this?
Yeah, I will not comment on revenue or on numbers, but I think from our perspective, the objective is to scale this service very quickly over the next few months to all of the metros to begin with. We've started with Bengaluru, as you mentioned. And we believe that the first first outlook will be to scale this quickly to all of the metros within a period of a few months.
What we're trying to understand here, Ajit, is that say you got X rupees from e-commerce. Will this be, in lieu of that X that was declining because of quick commerce, etc., or will it be ahead of that? If you could give us that sense. And in terms of metrics, yes, this provides better value to your D2C clients and your e-commerce clients, but does it, turn better profits for delivery as well? Because you are likely to invest in this. What is your internal ROC sort of EBITDA margin target for a business like this?
Our margin targets for a business like this in the slightly longer term would be similar to the margins that we generate on e-commerce logistics in general. In terms of what this impacts, this is actually something which will grow same city deliveries, which is a portion of the deliveries that are done on e-commerce. So roughly about 15 to 20% of all e-commerce deliveries are done same city from warehouses on the outskirts. That is the part I think that this will sort of impact. We do believe that this will add to the growth rate so far as e-commerce is concerned, and within that specifically for same city.
So if you could give us some numbers, how much does e-commerce contribute to your overall mix right now, and how much can this service add to that?
I will comment on the first part, I think, because that is public information. About 55 to 60% of our revenues come from e-commerce logistics. That's right. That's the figure.
But Ajit, has there been any quick commerce impact on the overall business? Because there has been a huge surge in when it comes to quick commerce, there's rise in competition, more players entering the market. Has there been any impact that you have seen on ground when it comes to your business because of quick commerce?
It's impacted us far less because of the categories that we serve and the kind of e-commerce orders that we serve. I think we had already pointed out that there are categories like grocery which have been significantly influenced by quick commerce offerings. The impact outside of those categories has not been something which is very high. That said, I think the fact is that customers do want faster deliveries. Brands do believe that across categories there is a value proposition in terms of providing a superior buying experience as well as a greater control on customer loyalty with faster deliveries, and this is an attempt to address that.
All right, what we thought earlier of QCom as grocery and food itself is now expanding even to electronics and a lot of other categories as well. So let's see how that plays out. But as that happens, you have the data of the third quarter. What were the express volumes like in the third quarter? If you could give us a rough sense, and what are the targets that you have for the next couple of quarters as well?
Look, I think we have our results and the analyst call coming up within a couple of weeks. So I will I will wait for that to answer that question. But suffice to say, I think we are fairly satisfied with where things have been in the third quarter.
Okay, so does that mean you will be EBITDA and profit positive in the third quarter? Obviously.
No comments.
And let me try this another way. In the previous quarter, the second quarter, which is public information, your express parcel volumes grew by about 2.5%. The revenues grew by about 7%. Typically, the third quarter, you see double-digit growth in the express parcel revenue and mid to high single-digit, if not low double-digit volumes in express. Would that be a correct assessment, or would you give us some directional numbers? We're not asking for specifics.
No, I don't think it's the right time to sort of talk about that, given that the results are just a few weeks away. So I think I would not comment on that right now.
All right, Ajit, thank you so much for sparing time and joining us today. Wish you good luck for the new offering and for the rest of the year as well. The management of delivery on their new offering. The stock currently trading 1% higher at around 335, still well below its IPO price of 487. Time for a short break then, but before we do that, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips, just as Mangalam's doing right now. And you can download the app from the Apple Store or the Google Play Store right away.
Welcome back. You're watching us here on Halftime Report. There has been a good performance by Ather Industries. As you can see at the bottom of your screen, the stock up 5%, revenues up 41%. Will be important to see how the profits, yes, it has flown through the net profit as well. Net profit from 17 crores has moved all the way up to 43 crores. Been a decent, cyclical up move for the chemical companies itself. Ather benefits from that itself. But let's talk about the F&O space. We have seen a bit of a fall in the market, no two ways about it, and that's been led by, the Nifty bank, which is down almost 750 odd points. And if you look at the contributors as well, on the one side you have the key draggers, which include the likes of Infosys, Axis Bank, HDFC Bank, and on the other you have Reliance, which is standing extremely tall. So just keep an eye out on the contribution that comes up for you. Reliance up 60 points. So had it not been for Reliance, would have been a lot lower in today's trading session. Infosys, Axis Bank, ICICI Bank and HDFC Bank have been the key draggers. Some support coming in from the likes of L&T and ITC as well. If you look at where the Nifty is right now, just above the 23,200 mark, we have seen writing at the 23,200 call. So that's an important one. But if we were to fall from here, there are some jitters where the 23,000 put writers are also active, but they've reduced their open interest. So if the market falls below that 23,200 mark, once again, we can see some pressure on the Nifty building up. But the 23,200 call writers believe that this recovery that we're seeing from the lows will not last beyond 23,400. At the lower level, 22,700 put writers have bought some for just punts. A lot of long positions added on names like Macrotech Developers and L&T Tech. Some shorts on PB Fintech. Keep an eye out on Canfin Home. That stock may enter F&O ban.
Reporting results as well tomorrow is Canfin Home, so keep an eye out on that stock. By the way, Ather Industries, they have 41.4% revenue growth. The margins too have seen a very healthy expansion from almost 20% to now 30%. And the stock after that brief spike still holding on to gains of around 4.5%. But Sudeep Shah of SBI Securities is joining us now for a quick chart check. Sudeep, good afternoon. Thank you for joining in. The 3-day rally taking a bit of a pause now because of the heavyweight banks that are pulling the index down. But what are the charts indicating here? Is this 23,000 level for now a very, very firm base for the index? And couple that up with your stock recommendations as well for the afternoon.
Good afternoon, Ormaz and Mangalam. Although the last few days we've seen the downside momentum in Nifty getting mellowed down, but post that steep fall from 24,200, we feel basis the derivative data now the index could be volatile between this 23,000, 22,950 mark and 23,450 zone. Now this is a 400-450 point congestion range in which the indices have been trading throughout this week. So this level of 23,450 is essential to be crossed for us to assume that some kind of a sustained recovery could be visible into the markets. And we expect the coming week to be very volatile with the result season being in full swing and uncertainty which is expected around the president, post-President Trump assuming office and what kind of decisions he would be making as soon as he is assuming office and the volatility surrounding the budget expectations. So all this is we feel this will lead to some incremental volatility in the coming week. And it is important that this zone of 23,450 is crossed for some kind of a sustained recovery. Now, on the downside, 22,900, 22,950 zone will be a very important support. And we feel that for the next week, this ideally should hold out given the kind of the long short ratio and the kind of levels that they are trading in the oversold territory. So we feel overall 22,900 to 23,450 could act as a range. And while this range, what we are assuming, there's a lot of stock-specific action which is going on in few selected space like railways, defense, chemicals, and fertilizers are doing well, and they are expected to do well in the run-up to the budget. So within this space, we have two stocks that are on our radar. The first one is from the defense space, which is BDL. Now, if you see BDL, the charts here have given some kind of a consolidation breakout post last 3-4 weeks, trading between 1100 and 1230. And this week we are seeing some the volumes being above average, and the stock sustaining above its 200-day moving average also here. So this could be bought with a stop loss at 1230, and the target on the upside could be 1350, 1370. The second stock that we have on our radar is ICICI Lombard. Now here, post the in HDFC Life's numbers coming good yesterday, we have seen some kind of a pullback in the insurance companies. The stocks of the insurance companies have seen decent run up, and post a sustained down move in ICICI Lombard from 2300 to 1750, 1800, we are seeing some signs of a recovery here from a medium term perspective. So it might not be an extreme short term trade, but yes, from a delivery based perspective, this stock could be added at the current levels. And the stop loss here could be 1900, and the targets on the upside could be 2100, 2130 in the coming few weeks.
Take that point today. Thank you so much for joining in with your ideas on the index and a bunch of stocks. On the other side, we will focus on Wipro. Under pressure ahead of earnings. Stay tuned.
Welcome back. Still a 90 points lower on the index, but Axis Bank and Infosys still continue to remain near the lows of the day. Infosys is still down 5.5%. Axis Bank has seen a slight recovery from the lows, was down 6% at one point, is down around 4.75 now, but Infosys continues to remain at the lows of the day, 5.5% lower. But some of the other losers in the broader markets today, and Sterling and Wilson, we just spoke of that, and Calan Jewelers, the name continues to feature in that list, another 6% down in today's session, another 20% down for the week. So 2 straight weeks of a 20% fall. The stock has now lost almost 30,000 crore in market cap over the last 10 trading sessions. So, and mind you, the stock is in the F&O ban, so no new positions, of course, can be created there as well. But on to earnings that will be reported today. Wipro is one of them, and Rima is joining in with what the street is expecting out of them. Rima.
Well, expect a muted quarter. Dollar revenue growth seen down 1.4% sequentially. In constant currency terms, it should be a decline of about 0.6% within the company's guided band of 0 to -2%. The company is struggling to grow, though last quarter was the first positive quarter that they'd seen in many quarters. But again, this time, growth will go back into the negative territory on account of furlough. So the question is, for Q4, that's a subsequent quarter, will the company show growth? Or is it going to be a downbeat guidance? So the Q4 guidance is going to be key. Consensus right now is -1 to +1. Margins for the company are seen slightly lower, 16.5%, and that's because of the 2-month wage hike impact. But how does the company get back to or move towards their aspirational margin range of about 17 to 17.5%? The company has in the past said that to have margins sustainably above 17%, they would need a lot more growth. So growth needs to come back. So the street is going to be watching one for the Q4 guidance and general outlook on the environment going into FY26. Do they get back on the growth pedal? And what's the outlook on margins and how they get back to that 17.5% range? The stock has done well. In the last 1 year, it's up 19%, outperforming the Nifty IT Index.
Rima, thanks a lot for that. Just before we take that break, also pull up PB Fintech, and that too is trading at the lows of the day now, 5.5% lower on that stock as well. Remember, it was a high flyer in 2024, returns of almost 200% in the year gone by. But as of now, over the last 1 month, the stock is down 20%. We take a short break. On the other side, Manisha Gupta joins in with Deepak Balani, who is the Director General of the Indian Sugar and Bioenergy Manufacturers Association. Stay tuned. Back on the other side.
Welcome back, and joining us on the show now is Deepak Balani. He is DG at ISMA. Mr. Balani, hi, thank you so much for joining us, and good news clearly coming our way as we see those reports from the ministry telling us that 18% of blending, ethanol blending is what was achieved in the month of December, the highest of course, and it does look like that we are on target for that 20% blending clearly.
Yeah, hello Manisha ji. Correctly said. I think it's very encouraging that we have been able to achieve 18% blending. And having said that, I believe overall average target of this year of 18% is definitely a done deal. And going forward in 25-26, as the target is 20%, and we are certainly sure, given the fact that the crop is going to be next year, the crop is going to be very good. So we are certain that in 25-26, we will achieve 20% blending, much ahead of its earlier target, which we were supposed to achieve by 2030. So I think it has a very good push by the government, very conducive and policy-driven initiative by the government has helped the OMCs and the producers to achieve 20% target. I think it's wonderful.
Mr. Balani, what the industry clearly doesn't like is the fact that even as you've been waiting and asking and requesting and pushing for ethanol price revision, and that hasn't come through yet.
Yeah, see, as rightly said, for last 2 years, there has been no revision of or correction of the ethanol price vis-a-vis the FRP increase. But having said that, I think government is completely aware of the situation. They are also aware of the fact that the mills are facing various issues because of non-correction of prices, specifically in the cane payments to the farmers. But I believe it will happen sooner or later. And we are expected anytime the announcement of correction of the prices of the ethanol will be made from sugar feedstock. And we are very hopeful that this could come anytime soon.
We've been hearing it for some time, though, Mr. Balani. It's yet to come. So until you get it, you don't know it. But, you know, what the industry was asking were bigger numbers in sense of revision. What we hear via, I mean, there's been a lot of conversation, clearly. Those numbers really are not so great. As you said, the mills are facing problems. You would look at a revision which is coming after 2 years. But is the quantum that is being discussed, is that enough, really? All right, we're going to try and get Mr. Balani back yet again. There was a technical glitch there. But as Mr. Balani said, this is something that the industry has been was asking in the previous season as well. And this is a second straight season. And we don't have a announcement when it comes to ethanol price revision. So that is something that the industry clearly has been seeking on. Industry also has been asking, remember, on the MSP, that is a minimum selling price in cents of sugar. And there is a lot of hope when it comes from this budget, when it comes to sugar as an industry. There has been GST as an issue. Now that 18% is done, the cumulative is still lower at around 16.5 or so. But the expectation that this the 20% blending that is, could be reached way ahead is something that clearly has been positive. But then there is life beyond 20% as well. And we do understand that there is a committee that already has been formed, that once 20% blending happens, what is it that the market will look forward to? And Mr. Balani, once 20% is done, what is it that the industry is waiting for? We understand there's a committee being formed for this.
So there is a committee, interministerial committee, which is preparing a roadmap for E20 and beyond. And they have already met various stakeholders, including ISMA. And we have proposed various measures which could be taken. Specifically, we have requested that the base blending may be kept at 20%. And we should have the launch of flexi fuel and hybrid EVs in India, where E100 fuel could be taken, specifically E100 hydrous vehicle. So I believe if that mandate is clear in the roadmap, this will increase our average blending to almost 25% by 2030, which will, in a way, increase the requirement of ethanol. And I believe we will require additional capacities. We also requested government to come out with various schemes, including the interest subvention scheme, so that additional capacities for ethanol could be introduced in India.
Mr. Balani, I also want to understand the quantum of ethanol price rise or price revision that we are anticipating. Will the quantum that is being discussed right now for rupee plus, will that help your margins?
See, I believe historically, if you see, the entire ethanol administrative mechanism, which was followed by the government for almost 5 years, had a relation with FRP. And there was a specific percentage of FRP in the ethanol price. So whatever I'm hearing, it may not be at that level, which we had proposed as per the formula. But having said that, that at least anything today since we have been waiting for last 2 years, would be good for the industry as it would help us to clear the cane payments timely. But having said that, I think government must look at going back to the formula which it once had. And because it is basically also attributing the right price of sacrificing sugar into ethanol. So I believe balance is required, and it is, I think, highly recommended that we at least go back to the formula which government has been using for last 5 years or 6 years.
All right, Mr. Balani, thank you so much for sparing time and joining us today to discuss the view ahead for the industry as a whole and the budget expectations as well. Manisha, thank you for joining in. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes you through the next half hour. Thank you so much for watching.